NUBURU is transitioning into a dual-use defense and security platform, focusing its operations on non-kinetic effects, electronic warfare, and directed energy technologies. To accelerate this expansion, they have targeted a European entity operating directly in the defense sector, Tekne S.p.A. On May 26, 2026, the two companies, alongside Tekne's historical shareholders, executed a binding share purchase and investment agreement. The central objective of this agreement is for NUBURU to acquire a controlling 70%. This diagram outlines the four independent capital levers used to structure that commitment: converting existing debt, injecting new cash equity, executing secondary share purchases, and structuring a revenue-based earnout. In defense sector mergers and acquisitions, utilizing a complex, phased capital structure minimizes upfront liquidity risk. It allows the acquirer to secure control while deploying cash only as specific operational milestones are met. Before the closing mechanics can execute, the buyer faces an immediate hurdle: sustaining the target company's operational continuity. NUBURU provided €13 million of shareholder financing to Tekne in January 2026 and €3.692 million in March. The agreement signing adds a €1 million advance, bringing total interim financing to exactly €17.692 million. This capital is necessary to execute Tekne's turnaround plan and keep the production lines moving while the parties wait for regulatory clearance. The primary regulatory gate dictating this deal is Italy's Golden Power Framework for Foreign Direct Investment. The Golden Power Framework legally subordinates cross-border defense acquisitions to sovereign national interest, granting the Italian state authority to authorize, condition, or veto the deal. NUBURU operates under a strict constraint, required to submit their formal notification to the Italian government within a 10-day window following the May 26 signing. To navigate this, NUBURU and Tekne engaged in extensive pre-filing discussions with government representatives, aligning their industrial plan directly with Italy's strategic priorities. Despite this proactive alignment, regulatory execution risk remains a factor until the government formally concludes its review. In sovereign defense, acquirers frequently inject millions of euros into a target's operations before securing control, placing immense weight on the final foreign investment approval. Once Golden Power authorization is granted, the strict mathematical mechanics of the closing process initiate. We return to the foundational block of the deal, the €52 million pre-money valuation. The first structural maneuver converts the €17.692 million of interim shareholder financing directly into equity. This step ensures NUBURU receives a significant ownership stake without laying out any new cash on the actual day of closing. The second maneuver injects up to €12 million in fresh cash. Combined, this €29.692 million capital increase supports expansion, but doesn't dilute historical shareholders enough to reach the 70% target. To bridge this, a direct €5.2 million purchase of secondary shares is executed. Because this specific tranche is bought directly from historical shareholders rather than issued as new equity, it precisely adjusts the final ownership ratio. Executed together, these mechanisms lock in NUBURU's exact 70% majority control. By engineering a takeover through a mix of existing debt conversion and targeted secondary purchases, the acquirer secures absolute control while tightly restricting cash outflows. The final mechanism of the agreement is designed to align long-term incentives after the closing date. It establishes a revenue-based earnout payable to Tekne's historical shareholders. The payment is calculated as exactly 5% of Tekne's annual revenues, determined strictly under US GAAP accounting standards. This chart maps the duration of the earnout, spanning a full decade of fiscal years from 2027 through 2036. To protect NUBURU financially, this accumulation is strictly capped. The cumulative earnout cannot exceed €29.692 million. The exhaustive conditions governing both the earnout and the closing mechanics will be formalized in an impending SEC Form 8K filing. Structuring a long-term, hard-capped earnout directly ties the minority shareholders' compensation to the company's performance, incentivizing them to actively support the turnaround plan. Evaluating the financial rationale for absorbing a target like Tekne requires looking closely at the sheer scale of their anticipated future production. Tekne's internal business projections, prepared under Italian domestic GAAP, map out a steep growth curve. This chart illustrates the turnaround, starting from a $58 million baseline in 2026. The forecast tracks an aggressive ramp, culminating at $231 million in 2030. Aggregating this trajectory yields a cumulative projected revenue of $655 million. This total introduces the true value of NUBURU's carefully structured set and Realizing this consolidation relies entirely on three specific gating factors. First, the transaction closing mechanics must execute. Second, the Italian government must grant golden power authorization. And third, Tekne must successfully achieve the targets of its industrial plan. The financial architecture reveals a stark contrast. A maximum transaction commitment capped at €64.6 million yields a pro-rata revenue potential nearing $500 million. By systematically converting historical debt into equity and capping future payouts, NUBURU structured a path to majority control that captures significant projected defense revenues while shielding its immediate cash position.